Welcome to Skills to Pay the Bills and today's segment of Shirley Luu and Associates with Dr. Shirley Luu and me, Tia Young, serving as your co-host. Shirley, our special guest today, is a senior mortgage professional whose career stems over 43 years and stretches from the South, the East, and the West of these United States of America. Her career began many years ago in the credit department of the then Sears and Roebuck and Company as a young consumer credit application processor. She has served as a mortgage loan processor, as a certified FNMA and FHLMC underwriter, as a former branch manager and mortgage broker owner and operator, and now she functions as a senior loan professional with Fidelity Direct Mortgage, LLC. She has been married for 45 years and has 4 grown children and 2 grandsons. She is a community activist and serves in her church with love and devotion. Please welcome Miss Fredicia Hardnett to our set. Welcome, ladies.
Thank you.
And a special welcome to you, Fredicia.
Thank you so much, Tia. I appreciate that. And thank you, Shirley, for including me in your broadcast. It means a lot to me.
Absolutely.
Thank you.
Partner do that with each other.
Yes. Well, my first question is, how did you ladies meet? I've known Shirley for a long time, and you're not one of the faces that I recall. So how did you guys meet?
A networking event.
Really?
A networking event.
Tell us a little bit about that.
Doc Walker's ProViewed luncheon.
Okay.
At a networking luncheon, and I'm the Miss Social Butterfly. I talk to everybody in the room, collect all kinds of business cards, and then I have to make an effort to go back to my office and work the net that I have just cast. And that's how I met Shirley. Shirley's as much of a social butterfly as myself. I think we were trying to see who could work the room the best. And we have said we're going to get together, we're going to do this, we're going to do that, and 2018 and 2019 we started putting that plan in action. So that's how we met
And then
several
Shirley,
years ago.
I gave Shirley a panic call a couple of nights ago because one of our hosts had a root canal, and he could tell that he wasn't going to be able to be here. And I said, Shirley, I don't think I can find anybody to. And then, so what did you do? What was your
Well, you know
action?
what? I mean, timing, you talk about the man above must have been looking out for Fredicia because she's literally sitting there and I'm talking to you and you tell me this, and I was talking to her like 2 minutes before you call about in the future that I was going to get her on the show anyway, you know? And so with that, I said, and then sure enough, you said, hey, we have a spot open, and that's how I decided, you know, let's get her on the show with us because, you know, I think, you know, a part of the financial planning and all that, mortgage is just such an important piece of our lives. Right. You know, and so, you know, hopefully some of the things we'll touch base today, you know, we're going to, you know.
And it also says that networking really does work.
Absolutely.
It does work.
It does work.
I've heard some people say, you know, you never hear back from people and things like that. But look, it's great.
If you're good at it.
Yeah.
If you're good at it. Quick short story on networking.
Okay.
In addition to meeting Shirley and connecting with her, it's just something about her synergy and my synergy. We just connected. So about 4 years ago at an open house, I met a realtor and gave her my card. She gave me her card. I put her name and number in my phone. We talked periodically. But 4 years later, she called me. She's no longer with the original company. She called me and said, you might not remember me. I met you about 4 years ago at an open house, and I really need your help. Networking can pay off if you're good at it and leave a memory that's worth remembering.
Worth remembering. Well said. Well said.
Well, networking is like exercise too. You know, when you buy a club membership, if you don't practice it and don't use it and don't, it's useless. And that's why, you know, people like that don't think it works because of that.
That's because of that. Well, we're going to get right into the subject at hand, and that is that I'd like for Fredicia to tell our viewers what you do and why you are so unique. I understand from reading some of the background on you that you're known as a general of finance. so just tell us a little bit about who you are, what you've done.
Thank you, Tia. And thanks again, Shirley. What I've done, well, over the past 43 years is help people understand money and help people understand and acquire real estate. We don't just like to say their home because real estate goes beyond the house you live in. Yes. It can be a second vacation home. It can be an investment property. It can be commercial properties. Currently, So anyway, I help people realize the American dream, and I help them maintain and retain the American dream.
Retain is the key word there, to retain
Very
it. Yeah,
important.
because sometimes people can get into something, but holding on to it is a little different. So I have some questions, and Shirley, jump in whenever, because I know that you also years ago had experience with mortgages and helping people get loans.
Yep,
and,
before 2008.
Yeah, right, that's
Before
right.
the meltdown.
After that, I was like, nope,
Okay,
I'm going to
no
let her handle it. She can have fun with it.
So I want our viewers to hear from you ladies about some of the challenging issues that people are having, and to get some expertise and maybe some help on that. And I'm just going to call out some, I know people that are today trying to finance or refinance property. One of the problems they say they are having is finding the right type of lender. What would you say to that?
Here I am. Call me.
That was easy.
But I mean, do you just walk into a bank? Or, sometimes people will refer you to, I know this has happened to me, I've had people refer real estate agents to me, and the synergy just wasn't there. I mean, we just did not connect.
Right.
And
Did you really have to ask her that question?
People are looking for the number to pay. It's 240-687-4256.
scrolling on your screen?
Going on the screen.
So what?
But
what
to
would you
answer
say
your
to that?
question, all joking aside, but in this industry, you must have a sense of humor, because whenever you're dealing with people's financial profiles, if you don't maintain a sense of humor, a sense of compassion, you can drive yourself crazy, because you'll take them home with you literally in your brain, and you can't do that and service them efficiently. Okay, so what the law requires is that a realtor actually give their customer 3 names. It goes back to networking. Most of the realtor partners that I have, I'm at the top of that list. But they do actually give them 3 referrals. And it's also based on the consumer need. Some consumers want as little down payment as possible. Some are buying a jumbo product and they must make a down payment. So then they want someone that understands money and is not afraid to talk money. So it all goes to knowing your customer. Yes, they can walk into their bank, into their credit union, and talk with them about mortgages. Most of the time, however, the consumer today is shopping just like they're shopping for a car. They go to different places, so it's all about advertising, it's all about networking. My business has been built on referrals. I try to treat my customers the way I would want to be treated, Tia, so that I can sleep at night. I know that I've given them the best transaction based on their financial profile and their long-term and short-range financial goals.
Okay.
So one of the things she's helping me buy the house actually on the mortgage, that I'm looking for. And of course, the first question I said, okay, are you competitive? Right. So I'm shopping. I'm one of the shoppers, right? And so she looks at me like, compared to who? So it's a different kind of thing. But I would tell you this, I trust her totally, and one of the things she said was, look, Shirley, we'll always make the number work as best as possible, because I'm very familiar with what my competition has. Not always I can be 100%, but most of the time I do beat, 95% of the time. So there's always those exception field, but what's nice is that she's willing to work with the numbers and working with us, making sure we have the right product, the right kind of loan, the right kind of things, and what is it's most important to me.
Exactly.
Now here's a big one, and I'm gonna put the 2 of them together. Qualifying for a loan, and then please include credit issues that people have.
Qualifying for a loan. We look at 4 basic categories. We look at your capacity to repay, your income. What is your income? What is your capacity to be able to repay the loan? It's important to have several streams of income, but we can't always use all of those extra side hustles that people have. But it can possibly be a compensating factor. So how strong is your income? How stable is your income? Are you jumping from job to job? Or do you have some stability? That's important in qualifying. Then we look at your character. What does your credit record show? How have you paid everybody else that you've promised to pay. We understand life happens. We understand there are life events that are beyond your control. What's important is, what have you done since that time? Are you still making excuses, trying to blame somebody else? Or have you really attacked the issue and started pulling yourself out of the hole? Okay? We understand those things. We give you a chance to iron out hiccups and stumbling blocks.
Okay, so we got capacity, character. Is there another C?
There's another C. There are two more C's.
Okay.
Your capital resources. And this is where Shirley can come in, because how much money you have in the bank. She has programs and plans that can help multiply that money exponentially, okay? So long range goal, short range goal. We're looking to see how much money you have in the bank right now today to buy the house, what programs might be available to assist you, how can Shirley's programs expand that money within the time frame that you're looking to buy. Okay.
I have a quick question for you on that. Sorry to disturb you, but they sit on the credit. Apparently, when you pull up the credit score, there's a regular consumer credit, and then when I borrow money, like want to buy a mortgage, they even lower my score. They look at a different credit score. Is that true? You know, like even though if I look at my credit score the other day, I thought it was like 780, 790, and the next thing you know, I'm applying for it, and it goes, no, that's consumer score. Like credit out there, you doing stuff, but this other thing, no, we go lower.
There are actually mortgage filters on the report that we use.
Got it. That's what's good.
The consumer files are different from what we see.
Got it.
Okay. But it's important for the consumer to monitor their report. And they can also get a free credit report once a year from all three bureaus. There are only 3 credit bureaus in the United States: Equifax, Experian, and TransUnion. Everybody else is a credit reporting agency. Okay. Each consumer, once a year, can get and should get a copy of their file directly from the Bureau to make sure there's no fraudulent activity and to make sure what is there is supposed to be there. So we're going to look at their assets, we're going to look at their income, we're going to look at how they pay their credit. Then we're going to also look at the collateral being offered, the property. Now, most of the time when they come to me, they don't have a property. They're very smart, and they're finding out what is their buying power, which is important because you don't want to get house happy and not be able to get that house.
Right.
Yeah.
Hold that thought. We're going to come right back. It's time for a station break. We will return shortly with this dynamic discussion that we're having. Thank you for joining us on Skills to Pay the Bills and today's segment of Shirley Luu and Associates. Our special guest today is Fredicia Hardnett, Senior Loan Professional for Fidelity Direct Mortgage, LLC. Prior to the break, we were discussing the 4 C's, and let me see if I got them right.
Okay.
Capacity, character, capital, collateral.
That
These
is
are
correct.
things that the bank is looking at.
The lender.
The lender
Yes.
is looking at.
Yes.
And so you were in the middle of talking about credit and some of the things that are needed. Can you finish that?
Yes, actually we had moved to capital resources,
Okay.
but I can go back and cover something.
No, go where we ended.
We were on capital resources heading into the collateral being offered.
Okay.
I was saying the average person will come to me prior to finding a home. Matter of fact, if they drive up to the real estate office and say, I want to see this house, the realtor is going to say, have you been pre-qualified or pre-approved? Because it's really a waste of time unless that person has cash money in a suitcase and shows the realtor the cash money for them to take them out and show them the house, and they don't know their buying power or if they're even qualified to buy.
Okay.
But collateral, that's the agreed upon house. A sales contract is rendered and the consumer and the seller have agreed on a price, but we, the lender, have to know for sure that it's worth that. So an appraisal is done, which the consumer pays for. So your 4 C's that we look at: capacity, which is income, character, which is their credit, capital, which is their money in the bank, and then collateral. Now that question was a 2-part question before the break. What was the second part, Tia? I want to make sure we cover that. Qualifying
it was qualifying for the loan, and in that I was asking you to talk about credit.
Oh, okay.
That's what it was. It's qualifying for the loan, and in that I was saying talk about credit.
All right. Credit doesn't have to be pristine.
Okay.
Let's debunk that myth right now.
Okay.
Because again, we understand that life events happen, things beyond your control, sickness, death in the family, pregnancies, marriage,
Marriages
you know,
breaking up, yeah.
divorces.
Right.
Those things happen. Government layoffs, government shutdowns, those things happen. Those are beyond your control. So we understand that. And unfortunately, most of the time, those life events catch the average person off guard unless they've taken part in some of Shirley's programs with financial planning to be prepared for that.
So the moral of the story is this: contact me, and all your problem will be solved.
I think you had mentioned the second part. I think the second part was about securing a down payment.
Okay.
We didn't talk, that was the second part after qualifying for the loan, securing a down payment, because someone recently told me that there are some creative ways nowadays that people can come up with the down payment, and I said, really? I thought they had to have the money in the bank. So if that's a myth, please talk about that.
Okay. That is a myth.
Okay.
Okay. There are special programs designed to help the consumer purchase a home. For example, we have a program with FHA financing that will give you the 3.5% down payment that you need. There are certain criteria that you must meet in order to get that, but if you meet the criteria, then you get free money. Free in that after 3 years of on-time payments, the lien against the house that you got for that free money is completely wiped out. Wow. So on a $400,000 property, you're getting 4% help. 4 times 4 is $16,000 of.
So is there a limit on the size of house you can get? When I say size, I mean money.
Yeah.
Because I didn't think it would go to 400,000.
Yes, FHA loans without going into high balance go up to 484, 350. I believe is the limit. Yeah, that's the new limit came about January 2019.
Is that the loan amount, or is that the house value amount?
That's the loan amount.
Wow.
The loan amount.
That's the loan amount.
Up to 485. And if the payments are made on time, then at the end of a certain period.
At the end of 3
years,
years in this particular program.
Wow.
That 16,000 or whatever that 4%, that's a tremendous help. And the rates are not that much higher than the standard rates. Now, anytime you use OPM, other people's money, you're going to pay a little bit more in the way of interest rate. Regular market rates right now are running anywhere at 4.75, 4.5, just depending your financial profile, because it's all risk-based pricing. Okay.
What about age? Is that, did you have to be a certain age?
Oh, no. I never will forget I did a loan for a gentleman. Oh, he was such a gentleman. He was 88 years old, buying his very first house.
That is encouraging.
Wow.
That's so encouraging to hear.
Yes.
Yeah.
He was so cute too. Anyway, but no, age is definitely not. We cannot discriminate because of age. 4 categories, that's all we look at.
Okay.
That's all we look at. So back to down payment. There are programs to assist with acquiring the down payment. When you talk about creative, a family member, mother, father, brother, sister, grandmother, grandfather, very specific, can give money. Okay. Once you get to cousin, it's kind of strange there. Okay. They can actually gift the money. Now, the family member can actually require it to be paid back, and that can be disclosed as long as the customer can qualify with that payment. Okay? So, no, the down payment has to come from legitimate sources. There are some second trusts. We were discussing in your office the other day. The 80-10-10, the 80-20 is making a comeback. In addition to regular 100% financing, bank statement program is making a comeback. So all kinds of good things if you're dealing with a knowledgeable lender with a reputable company such as mine. We're based out of Gaithersburg, Maryland, And with the internet, phone, and fax,
right.
we do loans in more than 12 states now. And we started in the basement
Now,
of a house.
you were naming the different services that have come back. I hope it hasn't come back where people don't have to have, you know, if you've got 800 credit scores, you don't have to have anything done. They just give you the loan.
No.
Because back in a few, you know, people were getting loans and, you know,
the industry learned.
They learned
the
the
industry
lesson.
learned its lesson. It's just like a parent giving a child too much.
Yeah.
Okay?
Yeah.
I want some more cake. I want some more cake. Okay, you can have some more cake. And the other parent is saying, no, you can't have any more cake.
Right.
Oh, he can have a little bit more cake.
Yeah.
No.
No
We
more of
learned
that.
the lesson.
Okay, that's good. And when you mentioned the 88-year-old gentleman that purchased a house, it made me think about some of the seniors that are wrestling with this reverse mortgage for seniors. Is that a good or bad thing, or does it depend upon your situation?
It depends upon your
I agree.
situation.
Yeah.
I agree.
Any mortgage is just like a tool in a mechanic's hand. In the right mechanic's hand, it can be very good and profitable. In the wrong mechanic's hand, they will hurt themselves. When I started in this business on the origination side, FHA had recently introduced the graduated payment mortgage. That was a long time ago.
Yeah.
Right.
Yeah.
Looks very much like an adjustable rate mortgage, except it was a fixed rate. Caveat was, instead of making the full monthly payment, you were paying a reduced principal and interest amount, and the interest you should have been paying was tacked on to the end of the loan. Consequently, people got ready to sell their house. Well, how do I owe more than what I started with? Because the system said you can qualify for the payment down here, but you knew you and your family could pay up here, but you chose to pay down here. So we put that difference on the back end to help you afford the house. Maybe one borrower had poor credit or hadn't been on the job long enough, but they were going to be in the house so you could make those payments.
Right.
So graduated payment mortgage was a very good tool, but because people didn't understand it, some of them got hurt. Same thing with the pick-a-pay mortgage. People got hurt because they made that little bitty payment, and then they went and bought all this expensive furniture and the Mercedes and these big expensive cars and all this other stuff to go with it. And then when that payment jumped, they're like, oh my God, what in the world happened?
Yeah, that's right.
So, reverse mortgage, excellent option for the right senior citizen, okay?
My mom has it. It's awesome.
That's good.
It allows you to live in your house, taking advantage of the equity in the property. You are required to make sure the taxes and insurances are paid. And then just like any other property, when the mortgage holder passes away, the family members have to do something with the estate.
Okay. Now we have a few minutes left, but I'm really big on partnerships. You touched on this in the beginning. You're in the mortgages. Shirley, you're into financial services. How will you guys partner together?
Well, you know, there's a lot of unique things. She mentioned something about earlier where she said investment property, you know. For example, let's say I have a house. And I'm like thinking, wow, that's a little nice investment property over there that I would love to have, you know, because people want to get into real estate. But imagine if I had a IRA account or 401k, it depends on the age I have. What if I can turn on a guaranteed stream of income for my retirement account? Take that stream of income retirement account, pay for that investment home monthly.
Wow.
And at the same time, get a renter, pay for that house.
Okay.
These are the different dynamics of your. Oh, by the way, this is my sister. Okay.
I understand.
So one way we see that dynamic.
Right.
The other thing, what attracted me, Fredicia, was I said, look, today you're doing that client a mortgage. They have just bought a big asset. Like asset anything, that asset still belongs to the bank. What protects that family if they get hurt, get sick, or any of those kind of things?
Right.
So that's where we want to come in, and you know, we want to play with each other, because I think
Right.
most. And then of course at the same time, I mean, she sat in an office yesterday, right off at this another attorney, you know, looking in the future with properties and things like that. And she already got customer, you know. So these are the things that it fits like this together.
Right.
Because it's part of, the asset, it's part of the financial planning.
Right.
And if I could piggyback on that.
I was going to say, you have the last word. You got 1 minute.
Oh, wow, okay. Oh, you shouldn't have said that. But anyway, to piggyback on that partnership, anytime you purchase real estate, you want to protect the asset.
Yeah.
Her programs, her financial instruments can help you protect the assets. At Fidelity Direct, we make mortgages that make sense. We're able to do things that the other guys are not able to do, and we do it while delivering what I call a best-in-class service.
Oh, I like that.
Because we like the referral. I brought my personal financial needs to Shirley. She changed my $175 a month to a little bit over $200 a month, and I have a better financial product that will pay us in the event of a life event, not just if he passes away.
Right.
So
That's
partnership is
wonderful.
important. Knowing what the other can offer and being willing to share the wealth is so, so important.
Ladies, I want to thank you so much. I mean, I know we went through things really fast, and there's some things that you talked about. It's a show all by itself. So I'd like to invite you back, Shirley. I'm sure you agree that we need to have her back on. So we can talk
Absolutely,
again.
absolutely.
Thank you so much. Thank
You
you
are
both.
welcome. It's my pleasure. And this is my sister, too. My sister from another mother.
The reason I tell you that, in case you know, a gifted program, you know, this sister, she write a check for $50,000, so this is my sister.
Okay, my sister too, 50, you know, lots of zeros.
Ladies, thank you.
You're welcome.
Well,
Thank
our time
you.
is up, and we want to thank you for joining us on today's segment of Shirley Luu and Associates. Just a reminder that everyone is invited to the grand opening of Shirley Luu and Associates on May 17, 2019, from 9:30 until 5 p.m. There will be food, fun, prizes, and wealth-building financial strategies. Bring a couple of your friends with you because we are going to have fun as we all learn more about the products and services of Shirley Luu and Associates. The address of the new location is scrolling on your television screens as we close. Thank you for joining us today. Tune in next week on Skills to Pay the Bills for another great segment of Shirley Luu and Associates. Bye-bye.